Welcome to the Funeral Funds Life Insurance Podcast. I'm your host, Randy Vandervate from Funeral Funds of America, and you can find us at funeralfunds.com. That's funeral, Funds.com. Whether you're interested in term life, whole life, mortgage protection, annuities, disability, business continuation, or final expense life insurance, we have you covered. Our team of experienced professionals will guide you through the complexities of insurance products to help you make an informed decision. In this podcast, I'm going to be discussing 7 tips for buying burial insurance for parents. Now, we all come to that point in our life where, realize that we're getting older and, so are our parents. And unfortunately, the older we get, the closer we get to our final day on this planet. So it's a good idea if your parents don't have the assets or the funds or kind of the means to pay for this, and they haven't prepared for it either, then that's something you're probably gonna have to get involved in, because if you don't have any insurance in place, the person that's gonna end up having to pay for it is likely you as the children. And that's a huge financial burden these days. And a lot of times it's just out of the blue. So that's where this burial insurance really is just a major blessing for parents and children throughout the United States. So we've got 7 tips to talk about today. Tip number 1 is to determine the coverage amount. And this is based off a number of things. It's based off the area that you live in. Cost of burial is going to be different throughout the United States. And it's going to be different within the state too, whether you live in the city or you live out in the country. It's also going to just vary based off the funeral home, whether you have it done at the funeral home or some other facility or something like that. On average, right now, the average funeral is costing around $10,000. That's at the time of this podcast. And we only expect that to go up with these kind of really high inflation rates that we're seeing. We're seeing that right now. Today's just a blip in time, but that could extend a long time. And we just know that as cycles in our economy go, we get these periods of high inflation followed by lower inflation. But we know there's one constant there, and that's that beast called inflation. So if you get a $10,000 policy today, it's going to cover today's cost, but in 5 or 10 years from now, or 20, it's likely not going to cover it. Well, it won't. If there's a high enough inflation, you're going behind kind of each year in coverage. So what we often recommend doing is getting a little bit more coverage than you need right now. So if the cost of a burial right now is 10,000, we would typically recommend, and what we typically help people with, is maybe a 15 or sometimes even a $20,000 policy. You've got to kind of have some intuitiveness there on how your parents are doing. If your family typically doesn't have longevity, which means people die sooner than later, maybe you can get by with a little less. And if your parents are just like fit as a fiddle, then you might want to just get a little bit more, just to make sure that, you got enough gas in the tank so your car doesn't run out of gas too soon. We just want to make sure that when your parents do pass away, you can take care of them lovingly and responsibility, take care of their final wishes, and just have enough money to take care of all of that and not have to come out of pocket. So our number 2 tip is to compare policy options. So just, a lot of people would say, hey, research and compare the different final expense life insurance companies, to find out what best fits your needs. Well, here's the thing. Life insurance can be confusing. The marketing that these companies out there use to market life insurance is extremely confusing. Have you ever seen one of those commercials that says $9.95 per unit? And, they show the commercial and the fine print blips up on the screen for like a half a second and then they move on. Well, the fine print is that's a 2-year waiting period plan, and it's very expensive. We did a whole bunch of videos on YouTube per different age groups and genders. And what we found is that 995 company, Colonial Penn, right? Colonial Penn, they were on average about 200% more expensive than our first day coverage program. So if our first day coverage was $75 a month, and I'm just pulling that, it could be 25, it could be whatever, But if it were 75, Colonial Penn would be roughly around 150, just almost double. So, but the marketing sounds so good, doesn't it? You know, hey, Bob down the street just died. Husband goes, oh, we're not going to have that life insurance conversation, are we? Oh, yes, we are. We're getting some today. We're calling Colonial Penn $9.95. Now, I'm not picking on Colonial Penn, but it's just that their marketing is per unit, not per dollar amount. And based on our experience and the experience of so many of our clients, it's a very expensive product. And we just don't know of anybody that really wants to take on that risk of waiting 2 years and not getting any payment in the first 2 years if you die of a health or medical reason. So there's other companies out there too. A lot of times that stuff you see advertised on TV or shows up direct mail in your mailbox, that's 2-year waiting period. So yeah, just compare policy options. We always recommend first day coverage or benefits. That's what we specialize in because none of us knows if we're going to die 20 seconds from now or 20 years from now. So our third tip is consider the health of your parents. So the first day coverage plans and that we prefer to help people with do ask health questions. And a lot of people freak out about that and go, oh no, I don't want to answer health questions. There's no way I'll qualify. I'm on high blood pressure medications and I've got diabetes and I'm bipolar. There's no way I'll qualify for first day coverage. And you know what? All of those we could get people first day coverage for. So don't freak out about the underwriting. That's our job at Funeral Funds of America. We're brokers. We work with a whole bunch of different insurance companies. And the reason we do that is different insurance companies ask different health questions and they specialize in different health impairments. So just because you won't qualify at one company doesn't mean you won't qualify at another company. But if you don't know insurance and if you don't geek out on this stuff, and I hope you can tell we kind of enjoy this stuff and we do kind of geek out on it. Doesn't make for great conversation at parties or anything, but it's a pretty unique and valuable skill set for us to help our clients. But yeah, that's our job is to understand who's going to approve who and who's going to give who the best and lowest rates. Our fourth tip is assess affordability. Just take a look at those premiums and, all the insurance in the world doesn't do you any good if 3 months from now you can't afford it. So, right, best intentions aren't always the best decisions, right? So that's why we always tell people, let's go back to that average cost of the burial in the United States. It's right around $10,000. So even though you would like to get more insurance, you'd like to get 15 or 20,000, but you're looking at it and you go, man, I'm just not sure we can afford that right now for our parents, or I'm not sure my parents can afford it. Then get the 10,000 because that takes care of the most immediate need. Because I can tell you one thing, if your parents died in the next day or two and you don't have insurance, 10,000 is better than no thousand, right? So just understand the affordability aspect and just understand that we can always come back and help you add more coverage later. You don't want to have no coverage, at least have some coverage in place. And then we can always review that like on an annual or semi-annual or maybe every 3, 4, 5 years, whatever you feel might be appropriate. And then we can look at adding more coverage later just to cover the cost of inflation. Our number 5 tip is check for waiting periods, right? Talked about that a little bit with the 2-year waiting periods, but so many of these companies out there, they're advertising and they've got these fantastic offers and they've got 2-year waiting periods. And you know what? You would never buy a car that you couldn't drive for 2 years. You would never buy a house that you could not live in for 2 years. You would never get car insurance that if you crashed your car in the first 2 years, it would not pay out. So why would you accept that with your final expense burial insurance? Yeah, it doesn't make any sense. So again, we always recommend first day coverage of benefits. That's what we specialize in. I will also say under that one, watch out for plans that are term insurance. There's some plans out there that say, hey, you can get started for $1 for the first month and then get up to $50,000 in coverage. But the challenge with those term life insurance policies that are designed that way is they're going to go up in price every 5 years and they're going to cancel once you get beyond age 80. And we never recommend a temporary type of insurance plan for a permanent need. and you dying is a permanent need. There is no way you're not going to die at some point in this world. So yeah, be cautious of those. Our sixth tip is consider add-on riders. So there's a number of different riders. Often they're included in the policy for free, which is terrific. Free is pretty cool. And there's some that you can add on. So one's an accelerated death living benefit, which means that if you were diagnosed with a terminal illness with less than 12 months to live, you could get the entire amount out in advance. So let's say you had a $25,000 policy, you were diagnosed with cancer, told you had 7 months to live. You could get the entire $25,000 of your policy out while you're alive with just a note from your doctor. And people go, well, why would I want to pull that money out early? It's meant for after I die. Well, after you die, it's going to take some time to get that money. And if you can access that money beforehand, most people, when they get a terminal illness, they're going to be devastated for a month or two, and then they'll come to terms with it. And then at that point, they go, you know what, I want to take care of as much of this stuff now so that my family and loved ones don't have to take care of this after I'm dead. So let me get that money. And this may seem kind of, I don't know, kind of morbid, but go down to the funeral home and plan your own funeral and pay for it with that $25,000. If there's money left over, you can do anything with that extra money. It's yours. You can pay off bills. You can give it to family members. You can go have fun. Maybe take your family members or yourself on that one special trip or vacation while you're still feeling well enough to do it, so that you can have that final memory. And perhaps if you take your family, they can have that final memory the rest of their life. So pretty cool rider there. There's also some riders that if you are confined continuously to a nursing home, you can get money out of your policy to help pay for that, because we know that's amazingly expensive. And then some companies will let you add on additional accidental death coverage. That means if you were to die accidentally in a death, that would double the face amount. So if it were a $25,000 policy and even though you had cancer and you were going to die in 7 months and you got killed in a car accident driving down to the doctor, it would pay out 50,000. So we don't really place a whole lot of stress on the accidental, because really, once people get older, the chances of them dying accidentally it's less than if they were to die of a medical reason. And our seventh tip is start early, because there is medical underwriting. There's medical questions. And I know in this podcast, I've kind of talked down the impact of that, because most of the medical issues that people get are easily insurable through us. We work with enough different insurance company. It's not an issue. But there are some doozies out there that will make it so that the only plan you can qualify for is a 2-year waiting period. And don't get upset with the insurance company if all you qualify for is a 2-year waiting period, because chances are you qualified for first day coverage at some point in your life. And, either you or your parents waited too long to get this insurance. And that's not the insurance company's fault. That's you as the insured, or your parents as the insured. So we just want to get this coverage early to lock in your lowest rates, lock it in at your youngest age, lock in the coverage so that this is never a worry for anybody in the family again. So that's my 7 tips for buying burial insurance for parents. My name is Randy Vanderveen, and I hope this podcast has been helpful to you. Funeral Funds of America can help you qualify for first day coverage or benefits at funeralfunds.com. That's funeral, FUNDS.com. And our phone number is 888-862-9456. We will be blessed to help you with this in the future. Until that day comes, stay safe, take care, and have a nice day. Bye-bye.